To the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ. Good morning, AJ.
Hey, Cyprian, how are you this morning?
Doing well. Episode 83. Today is June 2nd. I just took a look at the Dow, and we're over 500, 544. The people are happy. Is this purely driven by the employment numbers this morning?
Employment numbers, debt ceiling, all of those things. Plus, I got to remind you that it is a holiday week and volumes are low. We're going to talk about volume later in this show, but I think people should tune in because volume's important and it's oftentimes overlooked.
That's right. And do we want to start at the beginning of the week, right? Because last week we had a little conversation about the debt ceiling, and I think there was some rumors that we were going to get it fixed. And then yesterday or the day before, we got it passed, and the market was happy about that.
Yeah, I mean, that's all there is to it. We kind of expected that, but they sure did wait till they got to the, right at the end of the deadline. But it passed the House, it passed the Senate. It's off to President Biden's desk for signing, and then business as usual for the next 2 years.
And so we should just assume that the market is already priced that, yeah?
Yeah. So I think there's a lot of good response there. There's also been rhetoric by different Fed presidents that they're going to be taking a pause. Now, they didn't say that explicitly. They never say anything explicitly. But a couple of different Fed presidents that were interviewed on Wednesday hinted at a pause rather than a rate hike in the middle of June. June 13, June 14 is the next Fed meeting. I think the market liked that as well.
And would the employment numbers today help suggest that argument as well?
I mean, the employment numbers, except for the non-farm payrolls, employment numbers came in really positive, right? Meaning they came in as expected. Here, let me pull them up on my screen here so you can see what I'm talking about. So, of course, we had Monday off, right? And then today's employment number. Well, let me start with consumer confidence. So consumer confidence came in on Tuesday. And if I pull up consumer confidence, which I'm doing right now, let's see if it comes up for us. If it doesn't, I can pull it up on another tab. Let me just do that. Consumer confidence came in just about where was expected, right? And, you would think that consumer confidence might come in a little bit lower if, the Fed's tactics from 2022 were kicking in, but it's still pretty strong. So now come to today's employment numbers. And if you look at today's employment numbers, I mean, non-farm payrolls blew us out of the water. In fact, looking at April numbers were revised up higher than what they were originally reported. And then this is what they expected, a pause in non-farm payrolls, like just an increase of just under 200,000. Instead, they got an increase of 340,000. But where I think investors and traders alike are focusing their attention is on this different survey, the unemployment rate. So the unemployment rate actually was expected to come in at 3.5%. It ticked up to 3.7%. And I think that makes investors feel a little bit better, right? Because people have been saying that because of the tight labor market, labor prices have been going higher. People have been able to ask for more money for the same jobs. And that creates that spiral, because if you're having to pay people more money to create the goods and services that you're buying, of course, those goods and services go up in price. But otherwise, everything else came in as expected. And so, as far as I'm concerned, the employment situation the unemployment rate is where people are focusing. And if we look at the S&P 500, we look at the Dow, I mean, it ticked up based on pre-session trading, and it's gone higher since. In fact, the S&P is breaking through that 4,200 level we've been talking about.
Yeah, and then I guess as you mentioned that in the topic that we're going to be discussing later with the volume, is that something for us to look at in terms of a false breakout if the volume isn't there in like a shortened holiday week like this?
Yeah, so that's a good question. So we will cover this in our trending topic, but the scoop is volume is the great validator. You can put that in your notes. Volume is the great validator. Without volume, it really means that there's a few voices. It's just a few voices speaking loudly. A few voices are moving the price action that day, and it's not really going to account for future price action. In other words, if more volume comes back later and it has a differing opinion than what was stated today in the markets, it could quickly reverse.
And so does this what was I gonna mention? What was I gonna ask you? I had a question. In lieu of this breakout to the upside, I also saw that the VIX is down 5%, right? And so is that something that we can take a look at real quick?
Yeah, look at this number here. So let me go back all time. And so if you go back all time, this is all the way to the beginning in 1986. And if I take, for instance, I'm going to just verify what I'm looking at here. This is the linear regression line. So a linear regression line is just statistic mathematics speak for a best fit trend line, right? So you can see we're coming here from the beginning, January of 1986, all the way to the present, June of 2023. And so now when you zoom in, what that gives us is kind of an understanding. The VIX is a measurement of implied volatility, not to be confused with historical volatility, what we've seen in the past. The VIX is a measurement of what people's anxiety level is. And as you can see here, the VIX is way below the average anxiety level. In fact, it's going low. That means that people are confident. So as we go below the level, we get more confident, we have less anxiety. And as we go above that level, we have more and more anxiety. So we're reaching pretty low. In fact, the last time we saw 14.8, I mean, let me go back in time here. I'm going to go back 2 years. 2 years ago, we got down to as low as 14.1. That was back in June of 2021. But if you go back even further, let's take a look at 3 years. Yeah, you can see we just touched that low. So we're at all time, not all time, but 3-year lows of the VIX. For the last 3 years, we've been, for the most part, above on that kind of like anxiety scale. And so this is really good news for folks who want to start getting into positions like maybe some trend following could be in our future.
And just real quick for anybody that's watching or listening that hasn't really dove into options trading, how is this number derived, this VIX number? Isn't it based on the number of options contracts that are put into the market?
Oh, I love your questions today. Absolutely. So how can I made a big differentiation between implied and historical volatility. Historical volatility is actually quite easy to look at. You simply go back, if we take something like the S&P 500, which the VIX is based on, and we look back at previous bars, historical volatility can be just looked at as how crazy the trading has been over the last few days. You can see if you've got extremes between your highs and lows and your opens and closes, that was a pretty volatile day. But how do you determine what people are thinking about the future? And that's exactly right. thanks to derivatives like options and futures, people purchase or sell options and futures in order to lock in buying and selling prices, right? And so in other words, options and futures are a way to mitigate risk. So by using more and more of these options, it means that you're thinking that you need to protect yourself from risk. So the VIX is, and I'm simplifying this greatly, but the VIX is a way of measuring how much option usage is happening right now. How many options are people buying to mitigate risk? And so because you know that, you can determine if there's a lot of people buying options to mitigate risk, their anxiety level is high. It's correlated with high anxiety. If a lot of people are doing without options, they don't think they need them right now, they don't need to protect themselves from unexpected risk, then it goes down. And so the VIX, in effect, is a measurement of how much option usage is happening in order to mitigate risk.
And so the strategies that you implement at Trading Trainer with our trading community kind of parallels right in line with the usage of these options, right? You're either selling them or you're buying them, or you're selling and buying both of them.
We're doing a combo. That's exactly what we like to do. We like to buy them where it makes sense, and we like to the other thing about options is not every option behaves exactly like the other one. When I talk to folks that are just dabbling in the world of options, they kind of group calls and puts, which are two different types of options. Calls allow you to lock in a buy price. Puts allow you to lock in a sell price for a particular underlying asset. They group them together, and it turns out that there's other parameters of options. There's the expiration date of an option, and there's the strike price, the price that you're locking in. And depending on how you choose the expiration date and the strike price, the option's price, the price of the option itself, will change drastically and will be influenced differently. And so not all calls are the same. Not all puts are the same. They can, over their life, change price differently. So what we like to do is we like to optimize by selecting the right strike prices and the right expiration dates, depending on what we're trying to accomplish. I think the last time the mathematicians looked at it, there's about 27 different ways to trade options on different patterns you see in the markets. When it comes to the underlying asset, you're lucky if you can just buy and then sell to close it, one way. Or if you're lucky, you can do it the opposite, which is short it, sell to open and buy to close. But that's just two ways. That's why people are so attracted to options, is you could pretty well, design a strategy that you're going to implement depending on whatever's happening in the markets.
For sure. And that's why we have the show. That's why you created Trading Trainer. That's why you have your weekly mastermind session. And that's why we have the show live, so that anybody watching or listening that has a name that maybe you want to have put an options play on, throw it into the chat. If we have time, we'll run through it. I know that later in the show, AJ is going to go through his pick of the week. So a setup that he likes utilizing options, along with our speed round, a few names that have come up this week. But before we dig into all of that, let's go ahead and give everyone a chance to learn a little bit more on their own time. And so AJ and the crew at Trading Trainer have an awesome workshop, a daily webinar where AJ breaks down 4 shortcuts that he uses to invest, to keep a portfolio kind of running, generating revenues. It's almost like having your own business, utilizing these strategies. And so the link is in the chat. So head on over there, sign up tomorrow, sign up next week, whenever you have time. We're going to take a little break. And when we come back, we'll head into our trending topics. So Stay tuned, folks. We will be right back.
Boom.
Right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Heading into our trending topic, which we discussed a little bit at the beginning of the show. And I guess, the overarching trending topic is the importance of volume. But I guess I would kind of narrow the question a little bit more. In a week like this week, right, where we have Monday off, I would imagine Monday is a very popular trading day. Everyone's getting back into the office, funds are getting moved. Without that day, do the weekly numbers skew? Like, at what volume are we looking at to be off in order to kind of gauge whether this is a normal or abnormal, reaction to some sort of news?
Yeah. Well, that's a great question too. So the scoop is it might not even be just the fact that Monday was off, but a lot of times when you have a 3-day week because of a holiday, so it's either a Friday off or a Monday off, people look at that as the great opportunity to take the whole week off, right? Because now they only have to take 4 sick days off in order to get 9 days off or 4 days off to get 9 days off. So a lot of people take those Memorial Day weeks off, and that creates a big chunk of volume loss. The reason why volume is so important is because price action. I'd like everybody to think about a day of trading on any underlying symbol, whether it be an index, an ETF, or maybe even a stock, right? Any equity. The volume is going to represent a jury trial. And imagine that the plaintiffs are the bulls and the bears are the defendants. And the jury trial is going to decide by the end of the day, and you can watch that decision-making process go as the bulls and bears place their arguments. The jury trial is going to decide by the end of the day whether it's an up close or a down close as to whether the bulls or the bears wins. But the jury trial depends on how many jurors vote. So say, for instance, there's 10 people in the jury and only 3 of them vote and the other 7 decide to abstain. Those 3 folks are going to decide whether that day's jury trial is up or down. But what about those other 7? Those other 7s have opinions. They're just not placing them today. And so when you have low volume, a lot of times the same thing happens in the markets. The market prices can move based on how many people are trading that day. And if folks are not trading that day, either because they've decided to wait and see or because they're just not present, they're out on holiday, their votes aren't going to be counted. And so the people who are moving the price that day are the ones who are left over, the ones who are placing their votes, the ones who are buying or selling, the ones who are actually active that day. And when you think about holidays, especially, you think about a very special person who will pass up a holiday, right? That would be kind of your more intense person, your more work-oriented person. They might have different beliefs about how things work, and they may buy when the rest of us would sell and vice versa. So you have a few extreme opinions moving the markets, right? Or I like to say to my followers, a few extreme voices speaking loudly, especially during holidays. And that could move the market, but volume could tell you whether that's valid price action or invalid price action. And so that's what I'd like people to keep in mind is you always have to check volume, because if there's great price action but no volume, you always worry about future price action when those investors that abstained from buying and selling come back. So back to our jury trial example, if the next day all 10 jurors vote, right, and those 7 who abstained come back in voting bearish, those 3 that were bullish and, stalwart bullish folks, they're going to get overwhelmed and the market's just going to reverse back down. So keep that in mind. Some of the things, putting this into actual tactics, some of the things we look for is to see that volume was heavier than the previous day. We also like to see, you'll notice on my chart for American Airlines, I have a 50-day volume average line, this yellow line in my volume. I like to see on a day where I'd like to make some activity, that volume is above average. That tells me that a lot of the folks that are investing on American Airlines are actually telling me their true opinions, right? So on a bullish day, if volume is above average, that's a good sign. And finally, I like to see building volume. If I'm looking for a particular pattern, I'd like to see the volume building day after day, because that's telling me that more and more of our investors are believing in that pattern.
And it really comes to fruition when you look at that red bar, right? Like that was obviously something was very negative, and I mean the volume there is like triple, and that it stayed at that level for a couple days. Definitely looking for outliers like that. A follow-up question: other than this, like daily volume and volume average, are there any other volume tools that are useful that maybe someone can utilize?
Well, and it's not like this is not an unknown indicator, but these are kind of my secret weapons. When I'm actually looking to do some trading, I like to look at on balance volume. So a lot of times that's either, I'm just pulling up, this is my Thinkorswim charting package that I'm showing here, but you can find on balance volume on anyone. So I'm going to add on balance volume. We'll take a look at that. We don't need to look at this guy right now, so I'll get rid of him. And the other one is the accumulation and distribution. So let's see, there it is. Accumulation, distribution, and you want to look at based on volume. So this is the indicator that looks at volume. So how do these two indicators work? Well, what they do is they actually take into consideration the amount of volume that you've seen in the day or in the bar. We're looking at daily bars. And then it tries to assign it. If there's a lot of volume, should I give that a positive spin or a negative spin? So on balance volume takes a look at the price action compared to the previous day close. So that takes into consideration any, pre-session, after hours trading, as well as the next day's session. So on balance volume is from the previous day close, whereas accumulation distribution with respect to volume is actually not taking into consideration any of the previous after hours tradings, only taking what's happening in the current trading day as a reference between high and low. And so you're getting kind of the sentiment of all the investors by taking a look at these two indicators. So when I'm getting ready to place a trade, what I like to do is I like to pull up a daily chart like I've got here. And as we know with any daily chart, all of these previous day bars, they're set in stone. They're not going to move at all because they've already had their open, their high, their low, and their close for the day. But this little bar right here, and I'm going to zoom in on him. This is today's bar, and it's moving, right? Because we're right in the middle of the trading session. So the current close price is whatever the current price is, and it'll be moving up and down throughout the whole trading session. Well, at the same time, so will volume. Volume will be continuing to accrue throughout the day. And the on-balance volume and the accumulation distribution calculation for today will also be moving up and down. It'll be like these solid bars and then a little dog's tail wagging up and down. I like to wait, of course, until either the afternoon session or even all the way into the last hour of trading called professional hour to place my trades. And so by that time, there's been a lot of daily data accrued. And one of the checks I like to do, Sip, is I like to make sure that my on-balance volume and my accumulation distribution with respect to volume are all agreeing, and they're trending in the direction I want to go. So if I'm buying, I want these two guys pointing up. And if I'm selling, I want, or shorting, I want these two guys pointing down. And it's as easy as that, but it's a little secret tool of mine.
Awesome. A little bit of insight into volume, how to use it, the benefits. And yeah, I definitely like the 50-day volume. That's not something that I've ever considered, but I think it's important to have some sort of average volume number there. So great insight. Thank you for that, AJ. Let's see if we can apply any of these new learnings to some examples, right? So
let's do it.
So digging into AJ's pick of the week, I was looking at the morning notes, and this, and correct me if I'm wrong, this is one of the easiest approaches to getting into options trading and premium selling, right? And that's for ticker symbol XRX, Xerox, and
one of my favorites.
And the strategy here is buying the stock and then selling the premium so that you earn some income while hopefully the name increases in value over time. Now, is that the right thought process? And how can you dig into that a little bit deeper, AJ?
So the scoop is that's exactly what we want to do here. And what I like to do is I like to give myself a little bit of an advantage. And so I'm not just going to do what's called a buy right covered call or a protected buy right covered call. The difference between those two is that I'm putting a protective put in place. I'm not going to do all the transactions all at once. Instead, I'm going to take the approach of legging into the different transactions, separating them out in time. And I'm going to do that because I know that Xerox is trending sideways, and it's kind of in this sawtooth pattern. I call it a choppy. See, if we look over the last year, you can see that Xerox, it tends to find a low here around $13.50, $14 a share. And then it tends to go up and meander its way up to about $17 a share. And it's been doing that since, back in a year. It's been doing that for about a year ago. September of 2020 is when it started doing that. And so if I want to leg into a position, I'll buy some stock now. And then once it accrues in price a little bit, maybe I'll buy it at this low. It's currently trading at about $14.66. I could probably get it for $14.50 today. I've actually been accruing some Xerox stock over the last couple of weeks, and I've been getting it at as low as $14. And I'm going to wait until it gets up around 15 or 16. Once it's up at 15 or 16, I'll then sell the call, make a little bit of premium on it, and buy the protective put. And by buying the protective put, then I'll get a much cheaper price for that protection, and it'll give me the ability to then roll the protective put out at a later date and make some money on it. So I want to be strategic, and I want this trade to last a long time. I want to be able to put a good portion of my portfolio into Xerox and just have it accrue. I don't want to have to do too much activity to keep Xerox trade working for me. And so by buying this initial stock at a low, and then every time it's at a high, I sell the call premium, I buy the protective put, and then I simply rinse and repeat. Rinse and repeat. When it hits low, I sell back the protection. When it goes high, I put those two trades back on. And if I'm doing that once a month, that'll be fantastic. I'll probably pull just right over double digits, probably around 10% ROI on this every month.
And so obviously if you're owning the stock and it goes up in price, that's good. But what if you see a spike to the upside, what happens to the option? Is because you sold the premium, is there any additional risk there?
So a couple of things. So first of all, we look for signals before we sell our premium that a top has been found. And we've got, we use volume validation, like we've been talking about, to make sure that investors, we get a good amount of confidence in ourselves that investors are done seeing any sort of accumulation and they're ready to start bringing the price back down. They want to take some profits. But you're right. There's always that slim chance that once you've sold premium, say, for instance, we let the price creep up to $16 and then we come over here to our options. And once it's up at $16, we decide to sell either the $16 or the $17 call. Now, when we sell that $16 or $17 call, the one that's going to expire on June 16th, or if we go farther out, July 21st, basically what we're doing is we're selling somebody the right to buy our stock from us at that higher price. Now, if we bought it like I did down here at $14.50, it's not the worst thing in the world to have somebody come to us and say, I'm going to go ahead and exercise my right and give you the $17 because I just now made, the difference between 17 and whatever I paid, $14.50, $14. I made $3 a share if they exercise me. But at the same time, in order to get that right from me, in order to have that opportunity, they pay me a premium up front. So I also get that premium. All to say that if, I was wrong and the price does go a little bit higher, in other words, I didn't read investor sentiment correctly. They weren't done accumulating and wanted to start distributing or selling their positions and taking the little profit they made. If they decide to drive price higher, the worst thing that's going to happen is somebody's going to exercise the contract and take that position away from me at a huge gain. So that's a win situation too. It just means I'm going to have a chunk of cash that I'm going to move on to the next position.
So you basically give up your shares. You're like, okay, you've reached the target
at a huge profit.
Yeah.
See, that's the difference of legging in. If I were to have done both transactions today, bought the stock for $14.50 and then say immediately sold the $15, I'd have to take $15, right? That's what I'm agreeing. That's what I'm obligated to receive in return for my stocks. But if I just am a little patient and I wait for the stock to appreciate and then sell it when it's now I've just built a huge amount of profit. If somebody does decide to take my stock away, they're going to have to take it away for a higher price.
All right. Great setup in Xerox. Like AJ mentioned.
I'm buying that stock for future opportunities to sell the call.
Month over month over month opportunities. All right. So that's this week's pick of the week, Xerox, ticker symbol XRX. And now we're going to dig into our speed round. So all week we've had people throwing out some names. AJ has plucked a few, and we're going to dig in to see if there's any options opportunity. So we're going to head down south first and hear from Peter in Houston, Texas, who wants to know your opinion on Carvana, ticker symbol CVT, I believe. Is that correct? CVT?
No, I might CR Carvana. Let's see if I can pull it up here. Here it is. CVNA. Sorry, I gave it wrong in the notes. CVNA. Okay, so we've talked about Carvana a lot because Carvana, if you take a look back, this is just kind of a fundamentals look. Carvana at one point was trading at $380 a share. I think that was its all-time high. Let me go back even further here. I'm so curious. No, $380. And now it's been trading down at $10. So a lot of the investors who got excited about Carvana really took a haircut. But Carvana has impressed me a little bit because they're continuing. In other words, they're taking what investment they have left and they're parlaying it, and they're actually turning themselves into a great business. They're learning how to weather these storms when investors lose interest in their company. And so you can see that there's slow but sure some investors who are taking back interest. They're saying, oh, this company that we had decided was done back at the turn of the year when we had taken all of our money out and they dropped it back down to $4. This company continues to go. They continue to optimize, figure out how to make things work on this budget, and they're doing okay. And so and investors price of Carvana back up to $16. I had written Carvana off. I thought this company was going to go bankrupt. It was done. The model of doing used cars over the e-commerce, I was like, that's not going to work. But they figure it out and they continue to innovate. So kudos to the folks at Carvana. I hope you continue on this path, and I hope more investors get excited. As far as I'm concerned, it depends on where we are in our, like, did you see Carvana as being this potential? Were you one of those people who bought Carvana down at $6, $7, $8? And you said you saw the potential. If you did, you're in a good position right now. In fact, I wouldn't sell premium. It looks like investors are drawing the price up. This is kind of one of those ones where if I did see a top, instead of selling premium, I would probably just sell my initial position and take the money and run, right? So I think I'd be looking. In fact, I just got a reinforcement back on May 30th from my fast MACD indicator. And look over here. On the day that I got my signal from the fast MACD, my volume was heavier, it was above average, and it had been building up. And so I keep getting these reminders that, hey, investors are excited about Carvana. So don't liquidate your position until you see that investors are now sour on Carvana. I think you're in a good position. Now, if you haven't, if you're a little late to the game, I wouldn't be buying Carvana at this point. If you were smart enough to buy it down at the $8 or $10 mark, great. But I wouldn't be chasing. You're late, right? So I would wait for Carvana to top out wherever that is, and then I would look for opportunities maybe to make some premium on Carvana going sideways or even shorting Carvana. But right now, if you got in about a month ago, you're in Fat City. If you're thinking about getting in now, I'd hold off and I'd let the current rally go.
All right. Thank you, Peter. Definitely have seen the fluctuations in Carvana over the last few years, and I agree with you. Happy to see them figuring out car selling e-commerce. Interesting.
They're definitely still losing money every quarter, but not as much.
I'll tell you what, I don't know if you've seen those car monuments that they build where they like stack all the cars on top of each other.
I do think that there's one here in the DC area. I'm back in my DC studio. I think there's one around here probably, we have an area here called Tyson's Corner, which has a lot of kind of retail stuff, but I haven't seen it personally. In LA, they've got them.
I've just seen them before and they really stand out. Like if you compare it to like a dealership, it's like, wow, how did they do that? But yeah, I think it's like one of their branding plays. But it definitely sticks out, captures my attention.
Cool.
All right, moving on to our next name, heading back north. This is Beth from Kalamazoo, Michigan, interested in Upstart Holdings, ticker symbol UPST, a name I think we've covered in the past.
So Upstart Holdings, one thing interesting about Upstart Holdings. So this is basically a fund that likes to invest in new ventures. They're doing a big AI play. So they've gotten together and they've said, listen, we want to fund AI. And so I think that's admirable, especially with you and I have been talking about AI for like since November when when some of these language models have come out. You can see that investors are excited about this. This is also a play on Upstart. Let's go. Yeah, and so same thing, right? Upstart was trading back in 2021 up at $401, and now they've been trading down. But it looks like slowly but surely investors are getting back into the game, and they're backing some of these companies, and they like the announcement about Upstart, going into AI. So if you got in, if you decided that, hey, when we were down at 15, even all the way up, if you got in a couple of months ago at 20, I think your best play here is to let this current rally run. I can see that my signals, I'm getting my signal, but then the next day the signal gets reversed. And I got another signal. The next day the signal gets reversed. So pay attention to your signals. Don't shoot until you see the whites of their eyes. In other words, don't sell your holding until you see the whites of their eye. But I would let that rally run. Now, if you're late to the game and you're thinking, should I get into Upstart now? I'd say no. You missed the ball. Let it run through this current course. And then once it tops out, make a decision then. Maybe you have an opportunity to do some shorting. Maybe you have some opportunity to do some put selling. But right now, unless you got in about a month ago, anywhere from a month ago to 6 months ago, I don't think you want to sell calls against this. I think this is very similar to what we saw with Carvana. I think you want to let this trend play out. That's where I'll hold.
Yeah, and the AI play is probably a lot of the interest here. But if they do have an interesting pivot in their business to take advantage of it, I mean, now is the time. And it looks like they've got some
Absolutely
making up to do over the past 3 years in terms of that share price. So thank you for bringing that one up, Beth. We're going to head across the pond, across the ocean, all the way over to the Asia sphere. And this is Diane in Singapore, interested in a very, very popular name on that side of the world, and that's Alibaba, ticker symbol BABA.
All right. Alibaba, this was an interesting story behind Alibaba. I mean, again, we'll go back in time and look at its share price as it went up higher and higher with an all-time high of 320. Now it's trading at 85. So it didn't really take as big a bath as some of those pure marketing plays like Carvana and even this Upstart holding, trading down here at about $80. What I like about Alibaba is it's a solid brick and mortar, basically business, right? It's almost like an Amazon, and you can see they make money, and I like that. Now, the story behind this, of course, is this is based a lot around China manufacturing. In fact, it is a China company, and the CEO was very outspoken about capitalism, which, if you have any sort of understanding of China, China is not a capitalist country. And something happened. We don't know what happened. He's still around, but he's quieter. And so that kind of knocked Alibaba off of its pier, just because investors started to say, hey, did the China government pull this guy to one side and say, you might be capitalist in nature, but you're in a communist country, and at any moment we can take all of your business away from you because you're part of the people's world. It's not every man for himself. So that scared investors. Okay, so now back to today, back to the present. We seem to be finding support around this $75, $80, $85 range, and we seem to be finding resistance up here around $102. This makes for the perfect premium trade. And I just yesterday get a signal that we have found a bottom. In fact, why don't we take a quick look using the indicators that we talked about earlier? I'm going to go ahead and pull on the on balance volume. There it is. And I'm going to pull on the accumulation distribution with respect to volume. There it is. And so what I'm paying attention to, we had a gap up on open. So let's zoom in here. So today we had a gap up on open, but then you can see as far as today, the price action, this is called a doji bar, where the open and close price are just about the same. So what does that mean? The gap up on open, on balance volume associates today's volume to where price is compared to yesterday's close, which is up. So if we take a look at this little tail from the on balance volume, you can see that it's up, right? It's pointing up. When you take a look at the accumulation distribution with respect to volume, which is basically looking at what sort of price action have we had today, this one is going sideways. This one has a slight upward tilt. This one's going sideways. The volume today is very low. So no matter which way it's assigning the volume itself is pretty low. If I was thinking that I wanted to trade this today, I would definitely want to see that both of these are pointing up. What I'm basically seeing here is that investors aren't buying into the idea that a bottom has been found. Now, I'll look again on Monday, but unless something happens towards the rest of today, I might take a break from buying into Alibaba. With that said, overall, when I do find a bottom in Alibaba, I think either buying the stock, or because it's a little bit on the expensive side, you could buy a substitute option. So remember, we talked about expiration date and strike prices. If I go far enough out in time, probably like look at this, January of 2024. That's about 8 months out from now, a little less than 8 months. And I go deep enough in the money. Maybe let's take a look at probably this $40 strike price. That's deep enough. There's a lot of trading on this. You can tell by the very small bid-ask spread. If I buy some of this option, it's going to act just like the stock, but instead of spending $85 a share, I'm going to be spending more like $46 a share, saving about saving about $40 for each share I bought. Realize, though, by buying this option, I am opening myself up to more risk. Buying this option is incorporating a principle called leverage. So I want to factor that into my position sizing. But I could totally buy this $40, this is deep in the money, far out in time call, and I would be set up for when we get a little bit higher in price for me to then sell a call and buy a protective put and start that process of generating income on Alibaba. I think that you've picked a great time to be buying Alibaba. I would wait for that volume validated signal that we've been talking about. But anytime around now or the beginning of next week, accumulating some Alibaba or accumulating some of that substitutes call option, I think you'd be right on.
Yeah, and Alibaba is an interesting name in that you're right. They operate in a communist country, but are listed on a U.S. exchange, right?
A lot of companies do that.
And I imagine the risk is very great to the downside in the sense that you're right. China could just shut them down. The government could just shut them down. Like at least in the United States, there would be some discussion before something like that happens. In China, they'll just show up and be like, "Oh, you guys are done. See you later."
And it's not only that it's communist in philosophy, but it's also that it's quite authoritarian, being run by the same president for quite some time.
Yeah, well, speaking, we don't got our end together either with the president and the politicians and the debt ceilings, which we've discussed previously, but that's not what we're here for. We're not here to talk politics. We're here to talk investing, portfolio growth, things like that. And so before we end the show today, we do want to give everyone a chance to join your one-on-one program. And so if you're new to investing, or if you have a portfolio, you're sitting on the sidelines, you're getting ready for retirement, you don't necessarily know what you want to do or the best approach, AJ's one-on-one trading program is great for that. You'll get insights, you'll get the coaching, you'll get the attention that you need, tailored to your approach, your style, your portfolio size. And I know that we haven't had open seats for quite some time. In the last 2 or 3 weeks, some seats have opened up. So if that's something you're interested in, I'm going to go ahead and throw the link to that in the chat. Head on over there, scroll down, schedule an appointment, and you'll have a solid 15-20 minute conversation to really get your questions answered, and get you set up for success. So the link to that is in the chat. Head on over there and check that out. AJ, anything you want to add to the one-on-one coaching?
Yeah, I mean, people have been hearing us talk about it, SIP, for the last, I think it was 2 or 3 episodes, and they have been having those, no obligation calls. And we've actually taken on a handful of folks just in the last 3 weeks, but we still have about 2 spots left. So if you have ever thought about, what can I do with all this investment money that I've got that I don't know how to invest, and I really don't want to become a full-time trader, I'd rather set up these trades like you talk about, where things can just I only have to do a couple of transactions a month, and otherwise these things grow quite aggressively and have, very small amounts, if not no risk, after being in play for a couple times. You should check us out. Just talk to us. There's no obligation. There's no hard push. Just schedule a call.
All right. 2 seats left. You heard it, folks. Hit that link, sign up, schedule an appointment. Short.
Do we have a time to quickly bring up Cisco? I see somebody wants to talk about Cisco. I've been looking at it while you've been talking.
Let's go, Cisco.
All right. So I'm looking at a 1-year chart on Cisco. And first of all, I love trading premium on Cisco. Cisco stopped being a growth stock probably about 15, 17 years ago. They are the backbone of the internet, right? And so they'll be the backbone for at least for communications to the artificial intelligences, which are for the most part cloud-based. So they just constantly make a profit. As you can see here, they got earnings, they give dividends. It's a great stock to sell premium against. So we've got somebody who just typed it in. This is right on the fly. I can see that we have come off of our bottom, but you can see here that Cisco is already more than halfway up to its high. So we've basically missed by about a month's time our opportunity to either buy Cisco or buy call options in order to set up that initial covering position so we can then sell calls in the future. In fact, if you purchased it back on that, got it for somewhere between 46, 47, even at the most $48, then you're sitting pretty. And I would just wait for it to appreciate up to about 51, 52, wait for your signal that a top has been found, and then sell the appropriate premium, which would be a near-term at-the-money call, and buy yourself a protective option, go 3 to 6 months out, maybe with a strike price down here at the $45 zone, so it offers protection should you slam down. If you didn't do that, I wouldn't buy stock at this high price, right? We missed the opportunity to get it at 46, 47, 48. It's already trading at 50. So I would wait for it to top out. And Cisco's reliably been going sideways. When it tops out, that's our opportunity to short some Cisco. So when the rest of the people would be distributing, right, selling their position at a profit, we're going to be selling to open and then looking for an opportunity to either buy to close when it comes back down or sell some put options and buy protective calls. So we're just reversing the equation. But I absolutely love selling premium on Cisco, and I'm glad you brought that one up.
Awesome. That's a name we have discussed, and there's the play from AJ, the man himself. Man, I was just looking at the Dow, and we're nearing 600. So heading into the weekend, very positive vibes in the market. AJ, going into next week, what should we be keeping an eye on? What should we be, how should we be thinking with, I think, the Fed hike coming up, in the week after, right? The week after?
Yeah, so of course, all eyes are going to be on the Fed, right? I think that we just trade and we look for opportunities in order to sell premium by protection. I think that's where we want to be right now. Just doing our research, doing our due diligence, using volume validation, what we talked about today, to make sure that you're not acting on price action that's not substantiated by all the investors behind it. If you've got investors sitting on the sidelines, you don't know what they're thinking until they actually buy or sell. They could reverse that price action you're seeing. Make sure you're not following the few voices speaking loudly, few extreme voices speaking loudly.
All right. Well, there you have it, everyone. Thank you for your time, AJ. Everyone, thank you for tuning in. If you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. We do our best to provide you with quality content every week. And if you have any questions, concerns, comments, feel free to leave them in the comments section. Feel free to send us a chat or DM, or head on over to the website and hit the support button. Someone will always be around to help guide you, to help give you some answers. Otherwise, enjoy the shortened week, enjoy the positive markets, and we'll catch everybody next week.
Take care, everyone. Bye-bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.